Is MPW undervalued? Have you ever wondered if a company is trading at a price that does not reflect its true value? Today, we are looking at Medical Properties Trust, Inc. and asking, is it undervalued? Medical Properties Trust, Inc. is a real estate investment trust that focuses on owning and managing medical properties. With a market capitalization of around $2.6 billion, it's essential to analyze its financial metrics to understand its valuation better. One key metric to consider is the price-to-book ratio. Medical Properties Trust has a price-to-book ratio of about 0.54 to 0.55. This means the stock trades at roughly half its book value. A price-to-book ratio below 1 often indicates that the market values the company below its net asset value, which can suggest undervaluation. Next, let's examine the price-to-earnings ratio. Currently, Medical Properties Trust has a price-to-earnings ratio of approximately 6.08. This is relatively low when compared to many other real estate investment trusts and the broader market. A low price-to-earnings ratio can indicate undervaluation but may also reflect concerns about future earnings. We should also look at the price-to-sales ratio. Medical Properties Trust has a price-to-sales ratio ranging from 2.6 to 3.4. While this is moderate, it's important to compare it to its sector peers for context. Additionally, the price-to-tangible book value is about 0.55, reinforcing the idea that Medical Properties Trust is trading below its tangible asset value. Operationally, Medical Properties Trust has faced some financial challenges. Earnings estimates for the current quarter show a decline of about 43.5% year-over-year. This earnings pressure could explain the lower valuation multiples. Furthermore, the company's shares have slightly decreased in recent months, while the broader real estate investment trust sector has seen modest gains. On a positive note, insider ownership is relatively high at 17.5%, and institutional ownership is around 58%. This can indicate confidence in the company's long-term prospects. In real estate investing, the quality and stability of the underlying properties and tenants are crucial. Medical Properties Trust focuses on medical properties, which often have long-term leases and stable cash flows. This can be attractive to investors. However, the recent earnings decline and financial challenges suggest caution. Overall, Medical Properties Trust's valuation metrics, particularly its low price-to-book and price-to-earnings ratios, suggest it may be undervalued relative to its asset base and earnings potential. However, the earnings decline and financial headwinds indicate risks that may justify the discount. For real estate investors, this means Medical Properties Trust could representing a value opportunity if the company can stabilize earnings and manage its financial challenges effectively. Careful analysis of its property portfolio, lease agreements, and market conditions is essential before concluding it is definitively undervalued.